America has just crossed a number that sounds almost unreal. More than 40 trillion US dollars in national debt. That is roughly 50.8 trillion Singapore dollars. But the bigger story is not the record itself. It is how quickly the number is still climbing. The US debt has increased by about $1 trillion every 5 months over the past year. It reached 38 trillion in October 2025, 39 trillion in March 2026, and crossed 40 trillion in August. The Congressional Budget Office had previously expected this level only in fiscal year 2028. The causes are spread across many years and several governments. Major spending includes Social Security, Medicare, and defense. Pandemic relief under both Donald Trump and Joe Biden added heavily to borrowing. More recent spending, including Trump's 2025 tax and spending law and the cost of the Iran conflict, has added further pressure. Here is the part that matters more than the headline. Debt itself is not automatically a crisis. Governments borrow all the time. The danger grows when the cost of servicing that debt rises faster than government revenue and economic growth. That pressure is already visible. Interest payments have become one of the biggest items in the U.S. federal budget, while long-term Treasury yields have climbed to levels not seen for around 2 decades. Higher yields make future government borrowing more expensive, creating a difficult cycle. More debt can mean more interest, and more interest can require even more borrowing. For ordinary Americans, experts say this can feed into more expensive mortgages and car loans, weaker business investment, and slower wage growth. And Singapore is not completely removed from this. U.S. Treasury bonds help set the benchmark for borrowing costs across global financial markets. If investors demand higher returns to hold American debt, that can influence bond yields, company financing costs, currencies, and investment markets far beyond the United States. It does not mean Singapore automatically follows every U.S. move, but prolonged instability in the world's largest government bond market can create wider financial volatility. The bigger problem is political. Meaningful debt reduction usually requires some combination of lower spending, higher revenue, or stronger long-term economic growth. Every option creates winners, losers, and difficult choices. So the $40 trillion figure is best seen as a warning light, not a countdown clock. The real question is this: how much debt can the United States continue adding before markets force politicians to make choices they have avoided for years? Tell us what you think. And if this explainer gave you useful context, like the video, share it, and subscribe to 2230.